some of you are looking for the best interest rate today. So I want to share with you what's available as far as interest rate today. As many of you know, that Mortgage Center, we have our own brand of mortgage. Often we don't push this brand name. However, we do lend money just like everyone else. And here I want to share with you our internal rate sheet. Today is February 2nd. The rate sheet is dated February 1st. So as you can see, interest rate is getting very complicated to explain today. Not everybody get the same rate. In fact, not everybody get approval for a mortgage, let alone getting the rate. And as you can see this complicated chart, my job is simply try to find the best rate that you, based on your circumstances or situations such as income, credit, house value, and all that good stuff, put it through an underwriting criteria to make sure you fit into one of these boxes. Now, often people advertise, and they only advertise the lowest rate. As you can see here, we can, with all these rates, I can say today's lowest rate is 3.14%. Or if it's a variable rate, is prime minus 1%. That makes it prime being 3.45. That's 2.45% as far as variable rate. Now, as always, as they say, there's always a catch. If you notice under this category, it says high ratio. In fact, if I go back a bit further, you'll see that this is providing a purchase or a switch or a transfer. Purchase is obvious, it's someone buying a house. A switch is simply switching from one institution to another without asking for more money. And the term high ratio that we were talking about, high ratio would require CMHC insurance. In this case, it is for someone with less than 20% down payment, and we have them pay that huge CMHC insurance fee like we always have. And by doing that, they would have the best interest rates available on this whole rate sheet. Now, let's take a look at someone who do not need CMHC insurance. So as in the case of 20% down payment or more. So we see here under this category of 70% to 80%. That means 20% or 30% down payment. We'll find the rate is no longer the 3.14 that you saw, but rather it is now 3.49 or prime minus 0.65 being the best rate available. However, if the down payment is increased to 30% or more, 40 to 30%, then the rate is a little bit better. So instead of paying the 3.49, or perhaps we can also look at the lowest possible 3.44, it is now 3.24, and the prime rate is prime minus 0.9, or I should rather say the variable rate. You have a much better discount by having 30% or more for down payment. Now for those who have 40% or more, you'll find the rate is even lower, and in the case of the variable rate, they can have it as low as prime minus 0.1%, which is a fantastic rate. And the 5-year fixed rate is as good as the one who are insured with CMHC. Now, they're not always in a purchase or transfer that fall into the CMHC guideline. By the way, the previous 3 categories with 20, 30, or 40% down payment, this is in a category in the industry we refer to as insurable, meaning it must meet CMHC guidelines, even though we're not required to pay CMHC insurance fee. Now, there are products that are not CMHC insured. Example, if we were looking for a 30-year amortization, yes, 30 years is still available, contrary to what a lot of people are saying. If we were to take that, it is outside CMHC guideline. It is still possible, however, the interest rate is a little bit higher. Now, there are reasons for that. A little bit higher, however, being 30-year amortized, your monthly payment is a lot lower, and that makes the affordability a lot easier for most people. what we talked about so far are purchases or switches. Often we have people coming in because they need more money for various reasons. Money to do debt consolidations, money to do renovations, money for various reasons, especially with the last while where equity on homes have gone up so much that it's kind of nice that you're able to use the equity on your house to do things that you want. So that, technically speaking, is called a refinance. When you refinance, you're taking money out. And in this case, they're not insurable. CMHC have got out of that business purposely to slow down the mortgages available to consumers. So in this case, this would have the highest interest rate within this chart. So you can see the rate is 3.69. This is where it's difficult when someone advertise and say, no, our low rate is 3.14. What they don't tell you is if this is a refinance instead of a purchase, you will be paying a much higher rate. So there you have it. And I hope this gives you a sense of how difficult it is for us to price a mortgage rate for you. Now, of course, there are also other factors that are not mentioned in here. There are things such as credit rating. Your beacon score determines on what type of mortgage we can get, or in fact, in some cases, when the beacon score is low, you may not even get any mortgage. So credit rating, the income, is it enough to qualify for the new mortgage? The value of the home, the loan to value as we call it. For example, you may want $500,000 mortgage. Well, if your house is worth $600,000, well, then you can get it regardless of the interest rate. So if you want more information or you need to sit down and have a personal consultation, feel free to give me a call. David So at davidso.ca or 416-410-6663, or to make it easy to remember, 410-MONEY.